The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you, but mostly I treasure your presence here, and my outcome is to help you to become a better money master, folks. But mostly it is to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it is all about. So let's go take a look at one of our tools. This is the tool that I call reaping a multiple reward. Wouldn't you like to reap a multiple reward, folks? You see, for every disciplined effort out there, there are multiple rewards, key being discipline. You see, you're familiar with the law. I'm sure you're familiar with the law that says you reap what you sow. Am I right? Or am I right? Yes. Well, the extension of that law, folks, is that if you sow well, guess what? You will reap well. And by well, I mean multiple rewards, folks. Think of it like this. If you're in the service industry, and you render a unique service, your reward will be what? It'll absolutely be multiplied. If you're fair and honest, your reward will be multiplied. Now, if you give more than you expect, and that's how you should approach everything in life, if you give more than you expect, what do you think will happen? What do you think will happen, folks? You will absolutely get more. You know, you receive more than you expect out there. And the key, folks, the key is just simply discipline. In everything of value, folks, it requires what? It requires care, it requires attention, and it requires discipline out there. And the most valuable form of discipline, and this is the real key, the most valuable form of discipline is what? It's the disciplines that we impose upon ourselves. You want to be disciplined in your health? That's wonderful about TFNN on Fridays, because we got Nico DeHaan at 12 o'clock. You want to be disciplined in your wealth. That's why we use stops. That's why we take a look at trading patterns out there. You want to be disciplined in your relationships, folks. And if you do, your success story will just simply be incredible, and you will be a producer of multiple rewards. But what does it really take? What it really takes, you know, as I was thinking about this last night, what it really takes is the ability to be able to turn your mirrors into windows. In fact, if I were going to write anything down that I might communicate to you today, that would be the one thing I would write down. Turn your mirrors into windows. You might say, well, Steve, what do you mean by that? Well, the reality is, folks, when I talk about you need discipline and you've got to impose that upon yourself, what I'm really talking about is that each of us, myself included, everyone, we are always harder on ourselves than others. If you look in the mirror, you know, what you will do is you are harder on yourself. Maybe from a health standpoint, you know, you look at yourself front on or sideways and you start to beat yourself up. Now, if you start beating yourself up, how is it that you're going to feel on a daily basis, on a continuous basis? You know, what you're not going to learn is you're not going to learn from today's action. You absolutely do not want to beat yourself up. And what that really requires you to do is because in order to have progress, you've got to be able to turn that mirror into a window. You've got to, instead of looking and seeing yourself, look and be able to see your future and be able to walk through that. That's why I call it turning your mirrors into windows, folks. Because the reality is, the only thing that stops you from getting you what you want, what is that? It's your story. So all you need to do, if you want more, is tell yourself a better story out there. Let's go take a look at the story of the markets. Right now, you've got basically a totally flat market out here after a good move yesterday from the standpoint of simply the market had been trading sideways for quite a period of time. You know, you had the Dow up 85 points right now. Dow futures basically unchanged out here, trading out at 13,226. The ES Mini down a quarter of point, so no great shakes there. It's trading out at 1412. 50. If you are watching us on Tiger TV, then you get a chance to see the screens that we'll put out here, and you can always do that by going to the homepage of TFNN.com. You can just simply click on the Tiger TV button. You'll be able to see this show live. If you're listening on the radio, certainly you can catch the archive of this show on Channel 9. And as well, folks, you can watch us on Tiger TV on your mobile device, or you can listen real easily just simply by going to TFNN.mobi. So as we take a look around our markets here, again, everything relatively flat this morning. King dollar's up about 7 cents. Gold trade out at $16.20. That's up $1. Silver down 2 pennies. Trade out at $28.21. Let's go take a quick peek around the world here, and let's go see what we see. In fact, let's switch over. Last night, around the world, if you go over to Asia, you had the Nikkei up another 69 points. Now, yesterday, we were taking a look at the Nikkei chart. We were taking a look at what it was that we could expect just by simply taking a look at patterns, by taking a look at A to B equals CD patterns, by taking a look at retracements. So let's go switch over to that chart. Let's go take a look at what's going on over in Asia, over in Japan specifically. Let me pull up the chart here. So when we take a look at the Nikkei, what do you see here? You've seen the chart. I haven't touched this. This is the chart from last evening. And what we took a look at was we took a look at first yesterday's, well, not yesterday's candle, not last night's candle, but the candle session from Thursday evening, their Thursday, because they're already out at the bars right now. They're having nice dinner. In fact, many people have already eaten dinner. It's already past 9 o'clock at night out there. And if we take a look at what I was looking at on the chart here was looking at how this wide-ranging bar was coming into this swing point from July 5th here. And that wide-ranging bar after the point 786 area, and that was a Gartley sell pattern that was out there. When a Gartley sell pattern fails, what it typically turns into is not just a 100% move of a move, but it will also typically turn into a butterfly expansion. Now, the two butterfly expansions that you'd be looking at, what are they? You know them. 1.272 or 1.618. And you say, hey, what do you mean by that, 1.272, 1.618? What we're talking about is we're talking about the way that the world works, the way that you work. You work on expansions and contractions. The market works on expansions and contractions. These candles that I look at, they're just simply the language of the market communicating to us. They absolutely tell you on a bar-by-bar basis who's in charge. Clearly, when we took a look at the Nikkei out here on Thursday's action, the bulls were absolutely in charge. And when were they? They were in charge from the get-go, really, if you take a look at it, because it opened, if you take a look at the Nikkei, it opened at 89.67. The low of that session was 89.63, and it closed up at the high of its session. The bulls were in charge as they were coming into that swing point right here, going back to July 5th. What did it do last night? It got up and over that area. And what it's really setting up, it's setting up a 1.272 expansion as its next what? As its next target. And when we take a look at that expansion, it was nothing more than an expansion of major intersections, what I call major intersections, which we'll call swing points. If you take a look at any chart, all you want to first start off to do is to take a look at where you see a major turn in the marketplace. Well, if you take a look at the major turn here, you can see the market was moving up here. If you're watching us on Tiger TV, by moving up, I'm talking about going from June 4th up into the high of July 5th. And then what did it do? It made a change downward. So you've got a major intersection out there. Moves down from the area of July 5th all the way into the session of July 25th before it makes its next major intersection, starts to turn up. So if you just simply take the math, just simply subtract the high, which in this case here, if you've got a calculator, write it down on a pad of paper, because you may not have the expansion tool that I use in my charting application. But if you just simply write down 9130, forget about the pennies, 9130, and you subtract that from a figure of 8328, come up with that difference, multiply that times 1.272. Whatever that number is that you get, add that to the bottom here. Add that to 83.28. Where that's going to take you up into is that price point. It looks like right around the 93.80-ish range. The screen's a little bit far away from me. But that's going to give you what a 1.272 expansion is. Even if you don't have this tool, you can still draw these patterns on your chart out here. Now, that was one of the first patterns that we drew out there. What we also did was we just simply took a look at going from another major intersection out here, what I called a major intersection, which was the swing point of April 27th. April 27th was a high out there in the Nikkei before it then made its run down into the low that it established here on June the 4th. There's a couple of major intersections out there, but we just simply started with that one yesterday. And what we took a look at was we took a look at retracements of that area. We took a look at a 382, a 618, a 786 retracement. And what we saw completing at the same area of that butterfly was what? A 0.786 retracement. Now, what that really is also setting up for us, it's setting up a 0.786 Gartley sell pattern. So you've got, I'll go ahead and draw that in here. And what that really is doing, folks, is that is setting up two areas that should be strong resistance here. Now, just because it's strong resistance, can the market go higher? Absolutely it can. What you want to do is you want to be paying attention to that area. And what you want to really be looking for is you want to be looking at the candles. You want to say, what are the bulls and the bears telling me about the market right here, right now on that candle? If you get up to that level and you've got no bearish sign whatsoever, what does that set up? It sets up a move higher. What's that next move higher? That next move higher after 1.272 is what? 1.618. That 1.618, if it gets up here, what's that going to also be doing? That's going to be going against that major intersection. That's going to be going against and making a 100% move of a move. That's going to be getting up into the 95.20 level. Well, what else do you have at 95.20? Actually, I don't even know. Let's just go find out. And what we're going to do is we're going to go from our next major intersection, which is a little bit further north. That would be the March 27th swing point date in the Nikkei. And if we just simply go from the March 27th point all the way down to the same low, so we're going to use the same low swing point out here, which was in June the 4th, what you will see is not too far away from that one. Well, it is actually, it's kind of, it's pretty decent way away. Let me actually change this to black here. It might be a little bit easier for you to follow. Well, that didn't work real well. Just change it to a 3-minute chart here. Let me get back to that. Let me get the daily chart back on the Nikkei. There we go. Okay. So now let's go ahead. Let's try to change that to something dark there. So what we can see here is quite a distance between the 1.618 area and the just simply the 0.786 of that entire move. But right now, all that you have to be focused on, if you're taking a look at the Nikkei, and the reality, folks, is it really doesn't matter what chart it is that we're looking at. We can draw these same patterns on every chart. Now, sometimes the patterns don't exist, and you don't force a pattern out here. But this was just simply easy because we could come back, we could take a look at yesterday's action, we could take a look at the chart, see what we drew out there, and what you're going to want to be paying attention to is the Nikkei as it completes that 1.272 expansion out there. So now, as long as the market's again here really relatively flat, you've got the Dow futures up about 8 points right now, so they've just been kind of hovering up and down. I do expect the market will try to travel a bit higher this morning, and we're going to go take a look at that as well. But let's, as long as we're over here across the pond, let's go take a look at the other side of the pond. Let's go take a look at the Atlantic versus the Pacific Ocean, and we're back here at the DAX. Now, what the DAX did yesterday and what the DAX is doing right now, trading up at 70.20, the DAX is up by 24 points. Had a good move yesterday, and what it's really trying to do is what? It's trying to break through this 0.786 Gartley sell pattern out here. In fact, I would say it pretty much has qualified, and it's doing it. What's keeping it in place right now in the DAX here that you do have to pay attention to is the swing point of April 3rd. Why? Because that's where you had quite a downdraft out here. It is not broken out above that. If you can get the DAX to close above April 3rd high, the April 3rd high, 7081.06, it'll go make that same butterfly pattern that we were looking at in the Nikkei. But that's the challenge ahead. That's the mountain that the DAX has got to climb, folks. 877-927-6648. It's great to be here with you. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com TigerTV.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And in the pre-markets here, let's see, moving to the upside, you've got ANN, Ann Inc. I don't know what Ann Inc. does, but they closed out at $28.14, trading out right now at $32.40 out here. Let's go see what they've done. They did sales of $595 million versus $558 from a year ago. Earnings per share 63 cents versus 47 cents out there. Net income of $30 million versus 25. Apple closed out at $636.34, trading up right now at $639 and change. The Foot Locker, FL, is the ticker symbol. They closed at $34 and change. They're trading at $35.85 right now. To the downside, you've got Vivus Inc. VVUS is the ticker symbol. They closed at $22.76, trading down at $21.06. Marvell Technologies, MRVL. closed at 12.28. They are trading down at 10.87 right now. I believe they also released earnings last night. They did revenues of 816 versus 898. Interesting. And let's see here. What do they do? Earnings per share 24 cents versus 38 cents a year ago. Did 93 million versus 192 million. So they're taking it in the shorts this morning. Molly Corp. We looked at Molly Corp sometime, I believe, last week, and that thing now is trading lower again. They closed at $11.16, trading out at $10 even Steven right now. Aeropostale, ARO, they were getting a little hammered yesterday, I believe, and not because they went to the bar. They closed at $13.66. They're trading at $12.70 this morning. Let's go take a look at what's going on in the futures. Let's take a look at kind of, what occurred yesterday. Let's take a look at yesterday's action. Let's put it all in perspective. We're going to start off with the week area. The week area being the Russell 2000. So we take a look at the Russell 2000, and I'll go ahead and blow this chart up here on the screen. Number one, the red line that you've got coming across this, that happens to be the May 1st swing point low. The May 1st swing point low on the Russell is 811.40. Yesterday it got up above it, got to a high of 812.70, closed out at 810.40, so you rejected that area. Now, what the Russell's got, that candle out there also, folks, is a shooting star. Shooting star is the reverse of a hammer candle. It's just simply upside down. You would only see these as the market is moving higher. That's what you have here. Now, on a shooting star, where is your resistance area, folks? The shooting star resistance is going to be the high, in this case here, of that candle. Could be higher, depending on some other candles that would have been prior to it, but that happens to be your resist. That's one area of resistance. I'll call that resistance level number 3. That level up there is 829. If you take a look at the first resistance level, might be actually the low of that swing point, right where it traded into yesterday. And the second level of resistance is going to be this set of candles right here. If you're watching on Tiger TV, the set of candles I'm referring to are July 5th. July 5th was a doji candle. July 6th was a bearish engulfing. However, if you take a look at the move up on the prior session, who was in control? The bears were in control there, and the bulls were in control there, weren't they? And they were feeling what psychologically? Feeling very good, especially as they came into that May 1st swing point. And then what happened on that next section? Next section, you had a doji. That's where you've got basically balance between the bulls and the bears there. In fact, this was really kind of one of those textbook perfect dojis. And then what happened on the following session? Who was in control? The bears took control. That is a 3-river evening star candle out there. That is a next area of resistance. You get up over an area of resistance and that becomes support, right? So the Russell 2000, that has not occurred yet. So the Russell 2000 has a couple area of resistance points out there. And it is New Moon Friday. The new moon coming in at 11:55 Eastern Standard Time today, folks. So that is on the Russell 2000. Let's go take a look at, let's say, what had been strength out there, that being the Dow. So let's go take a look at the Dow futures, and we'll take a look at swing points out here. What we're looking at is May Day, May 1st out here. Now the Dow is inside that swing point. The high is 13,284. You're at 13,241. What do I expect? I expect that high to be tagged sometime today. Might get tagged at about 11:54. I'm just kidding. On the new moons, the full moons, with regard to price moving up or down, they don't move right up into them. But do look for the Dow futures to somehow get up into that 13,285 level out there. If we go take a look at, let's see here, got just a few seconds. Let's go take a look. Let's switch over to gold. Not a lot going on in gold, one might say, right? Well, if you take a look at the gold chart out here, and you're looking at this little black squiggly line out here, that black squiggly line is what, folks? That is the 50-day exponential moving average, folks. That has been holding gold in check for quite a while. I don't know why. Gold trying to break out of that but it's running into trouble. 877-927-6648. We get back, we'll go see how these markets are going to pop. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 23 points. The S&P up 2. Composite is flat. Small caps down 1.5. Microsoft trading down 2 ticks right now. Intel off 13. Google up 26 pennies. Cisco up another 18 cents. Having a good day yesterday with volume gapping up. Coming into a downdraft. We'll take a look at that Cisco chart here in a moment. You got Apple trading up $5 right now. Again, leading things to the upside and to the downside. We mentioned Ann Inc. ANN. Let's go see what Ann actually does out there. I used to have an Aunt Ann. Doesn't everybody have an Aunt Ann? Ann Inc. What do they do? Together with its subsidiaries, they operate a retailer of women's apparel, shoes, of course, for Aunt Ann. And so a retailer of apparel, shoes, accessories in the United States. Okay, Ann Taylor, that makes sense. Ann Taylor and the Loft brands out there. So that is moving higher, and let's go take a look at that. Let's go first start off by taking a look, just for old Aunt Ann out there. Let's go see what Ann Taylor here is doing, popping up this morning with volume. Nicely done out here. So let's go take a look at that. That is confirming certainly an A to B equals CD, and coming up against the swing point, up and over the swing point that goes back to May 16th, 2011. Let's put this thing on a weekly chart here first, get a better idea maybe on a weekly chart what Ann is doing out here. Just give me a second here. So this thing has made a nice steady rise off of of course, the March 9 lows. So what you see out there, you do see higher highs and higher lows. So that's a beautiful looking thing. Let's just see how far this is retraced off of its highs, its all-time highs going back to November 2006 when it traded up at a high of about $45.15. The low that it made on the weekly chart all the way down at March 13th, 09, down at $2.41. $2.41, trading up at $3.38 right now. That is a nice little, how much, what would that be? About a 15 banger out there. What it's trying to do right now is get up into the $36 area. At $36, that would be a 0.786 retracement out here. Let me go see what kind of candle pattern you've got over there. Is it showing any kind of resistance? Looks like it could be one of those weekly evening star candles, but that is where Ann is headed to. Let's go back now to the daily chart. Let's go see the most recent ABC pattern out here. Our A point on Ann is going to be the low of February 2nd, 2012, when it was down at a gap down and did it with volume 8.8 million shares. That's your A point. Your B point on this is going to be up at the high on April 18th, out at 29.81. Pulls back, does look like it does about a 0.618 or 0.786 retracement, and gapping up into the D point, gapping up into the 1 to 1.272 area. What does that say? That says it's going to go higher. That says that what it wants to really do is get up to 36.41. That's on the daily. So the daily says 36.41, and what did we say the weekly said? The weekly said $36. That is where Ann is headed to, trading out at $32.95 right now. Let's go back. Let's take a look at Cisco. I mentioned we would look at Cisco, see how that is trading, moving higher today. Had some real volume in that yesterday, but that was going against a supply line. Now, the supply line on the way down here in Cisco was on April 10th. And the supply line there, folks, if you're looking at our screen here on the daily basis, 198 million shares out there. That was to the downside. Yesterday to the upside, what does it do? 152 million shares. Now, let's take a look at the A to B equals CD out there, that A point out here being the low of July 25th, the B point, which it blew through yesterday with volume, August the 9th. Now, if you take a look at that retracement there, the retracement is what? Shallow hell out there, 0.382 retracement, even less than a 0.382 retracement. Just take your rubber band to be able to figure out the energy potentially behind this move out here and back it off even less than 0.382. And what you can see is Cisco moving up into the $20 range here, $20.72. Now, let's go back and take a look at just simply the retracement off of the high. So if we take a look at the retracement off of the highs here, folks, we are looking at a Gartley sell pattern right there at actually at the 1-to-1 A to B equals CD. That's in that $19.95 area. Let's put this on a weekly chart. Let's see what it's actually doing on a weekly chart, because maybe that downdraft started a little bit earlier, and sure enough it did. So the downdraft, let me just refresh this screen out here. Let's get the actual, oh, look at this that it's running into. So this thing is really running into downdraft going back to February 2011 out here. Now it's up and over that area, 1861, but that certainly is some resistance. But what it's really doing is the downdraft that it is taking on right now. Just so we can see, Cisco happens to be the week of May 11, 2012. Now, if you're taking a look at that candle, you're watching this on Tiger TV, you're seeing that high is $19.26. What it has gotten up to so far is $19.23. The volume this week, 289 million shares, going into 438. So it's not going to have the volume. It's coming right into an area on a weekly basis. The weekly is going to rule more than the daily, and the daily is going to rule more than the 30-minute, and so on. So that's how you want to make sure that you're using your charts, and it's also a reason why you want to make sure that you are going up and down so that you can see what things are, what other patterns are out there, what other areas of resistance, support, and so forth out here. So Cisco actually should be running into a resistance area here in just a few minutes' time, sometime earlier today. Let's go take a look at a couple of things here. Pop into the downside. You've got company Hibbett Sports, HIBB. Let's go see exactly what HIBB does. I'm not familiar with them. Maybe you are. Obviously, they're in the sports business. Let's see what they operate in the sports business. Sporting goods stores in small to mid-sized markets, primarily in the Southeast. I have not seen one here in the Southeast, Southwest, Mid-Atlantic, and Midwest regions of the country. So if we go back and take a look at the chart, let's put it up here on the screen. HIBB is the ticker symbol. And that is moving down about 6% this morning here. Gap down, $57.86 is what it is trading at here. Let's go see what the news behind the move in Hibbett Sports is. See if they released any numbers out here. They did 26-week net sales, $398 million versus $356. So it must be the guidance. Net income, $34 million versus $27. So it must be the guidance that they've given it. And what this has done here is you did see some institutional selling come in this equity here. It really began on the day of May 16th. May 16th, really, I guess you could go back and actually say it really started on May the 15th when it started moving down, some volume off the top, 714,000 shares. Next trading session, 950. Next trading session after that, about 720. But it's really right down here at the May 18th level, 1.2 million shares. That area is really what is being dealt with and tested here this morning. So on this equity here, I would expect that you'll see it close below that $58 even Steven high from May the 18th as it works off some of that supply out here. Otherwise, really not a bad looking stock chart. Let's put this on a longer term as well. See what, let's go put this on the monthly chart. Look at that. That's been a little bit of a rocket ship. Let's put it on a weekly chart as well. See what we have going on out here. So pattern-wise, candle-wise, let's see if this was actually a bearish engulfing from last week. So the week of August 3rd has a little doji, looks like a dragonfly doji out there. It closed out at 62.31. The following week, last week, it opens up at 62.05. So no bearish engulfing candle there. And not a bad looking chart here. Got to watch the level here of 54.05. That is the low of May 18th. If that doesn't hold, the problem with that is your next area of volume is all the way back at December 17th, 2010 out there. Mickelson Corp, MCK. Let's go see what Mickelson Corp does. They are trading lower. They are number 2 in the clubhouse today, dollar-wise to the downside. So we take a look at Mickelson Corp together with its subsidiaries. They deliver McKesson. Jeez. Okay, now I know who McKesson is. So just had to pronounce it properly. So McKesson, they are a pharmaceutical supplier. They provide, they distribute drugs for drug companies to all the drugstores, most of the drugstores out there. So let's go see why McKesson is having trouble here. They're trading down about 2.5%, down a couple bucks and change. Let's see if they had any kind of no earnings or anything like that. But let's go take a look at the stock chart of McKesson. MCK, a friend of mine from back in the computer distribution days, went to work with those guys. McKesson, this was a long time ago. McKesson trading down into the swing point here. We're looking at the daily chart now, folks. And if we take a look at the daily chart, what we're looking at is May 23rd, the low out there, 85.95. The volume, 2 million shares. So far today, you've done 393,000 shares. And what this is doing, this is making an A, B, C, D down. This is coming into the B point that is taken out as the B point from June 6th. That is 1.4 million shares. You're trading below that. Let's go take a look at this possible A, B equals C, D down. It's also coming right into this area here that it last saw a sign of of any kind of strength here. That sign was on April 12th when it gapped up with 7.3 million shares. But so far, we'll have to, you want to come back and take a look at this chart. We'll do that on the Monday, see if those bulls are still in there supporting the stock. But let's take a look at the possible A to B equals CD down that this would be creating. Our A point's going to be the swing point high of July 19th. 97.23 is the price point. Your B point is going to be August 6th when it made a low of 87.19. Does really no retracement whatsoever. So that could be setting up, more than a 1-to-1? A to B equals CD, which would do what? Take it into the $76, $77 price range and come all the way back into January 19th, 2012. But first, what it's got to do, it's got to close below 87.19 with more than 1.4 million shares. What it's really got to do, in my opinion, it's got to get below the area where it broke out, where it had a sign of strength. And I would say use the low of 86.64. That also has 1.5 million shares. That is on McKesson. Let's go take a look at, I did want to take a look at MCP, even though they're not a dollar leader, they're only down a buck. That thing was trading at all kinds of, I think it was all-time lows out there, before lower than the original IPO date. So let's go take a look at the Molly Corp, gapping down again. Of course, let me just refresh my screen out here. Make sure I've got all of the active data. Trading out at $10.09. This thing has done nothing more than gap down. Let's go put this on the longer-term chart. The monthly here will tell the picture. So it is continuing to trade lower. And where this thing is going to stop, nobody knows. The IPO date is July 2010. The low of that was $12.10. You're trading out at $10.10 right now. Absolutely nobody in this equity in the money. Maybe a couple of shareholders, but not too many. Back to the weekly chart. Let's go see what patterns are out there. And I could create a number of A, B, C, D patterns, but this thing here is just simply headed lower. It's simple as that. Let's go take a look at what Marvell Technologies is doing. Marvell releasing numbers. We took a look at that in the pre-market, just their numbers. They had missed revenue. They had missed income, getting a little punishment today, trading out at $10.59. This thing here has been on a downhill slide going back into the April 2010 time frame, and it's going after another swing point. The swing point it's going after is July 12th. 2012 had 10 million shares there, and what it has done today is it goes after it 7.9 million shares. So you've got Marvell Technologies going lower, and that is one heck of a to B leg, isn't it? If you just look on the daily chart here, folks, if you took the small A to B equals CD, where would you start if you were looking at that? The smaller one actually starts out at the swing point right back here, April 19th. You got the larger one that you certainly could go after. Now, this is interesting, so let's go take a look at Marvell Technologies, because I would pose the question to you. If you just simply studied candles, and I want you to be able to study candles. Why? Because they give you so much information about what's going on between the bulls and the bears. But let's go back and let's take a look at Marvell. Did it give you a clue as it was up at its highs that you had to absolutely be cautious? And of course you know the answer to that. The answer is yes. Let's go take a look at that candle formation, because it's a beauty. And when you see these either at bottoms or at tops, you just simply want to be paying attention to them. It's called the island reversal. The island reversal, folks, if you look at the February 2nd, if you go to your charts or you're watching us on TigerTV, what you're taking a look at is that February 2nd had a nice day, didn't it? I mean, who was in control on this session here February 2nd? Absolutely, the bulls were in control. You know, on my chart, they just happen to be green candles, show you that the opened at the bottom of the body, closed up at the top of the body. And the body, folks, is really the essence of trading. And so if we take a look at the that candle, bulls absolutely in control as it was moving higher. And it was taking out a swing point that had volume, though, of 23 million shares. As it got higher, did it with 13 million shares. That already was giving you a little bit of a clue to be somewhat suspect, right? Now, what does it do the next trading session? Well, the high of February 2nd is $16.56. The low of the prior session, $16.60. 4 pennies. Does that 4 pennies mean anything? It absolutely does, folks. That 4 penny difference was a gap, an open window. If we take a look at Japanese candlestick charting out there, and that open window had a draft here. Now, usually gaps will get closed, right? Well, if you take a look at the next trading session here, now all of a sudden is there a change and a shift in psychology? Who was in control? It gaps down. That left an island Gilligan's Island out there. That was your signal that the move to the upside was over. That, folks, was February 3rd when it was up at $16.80 plus change. What's it trading at today? $10.57. 877-927-6648. I'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A TGIF Friday. Hopefully you've got some fantastic plans for the weekend. You know, it's amazing that it's already the middle of August. Middle towards the, a little bit beyond the middle of August here. Time absolutely flying, as it always does. And if we take a look at the Euro chart, let's take a look at the Euro. We've got the 30-minute Euro chart out there. You know, earlier in the show, we were taking a look at ANN. ANN is a ticker symbol. And Taylor Stores, Loft Stores, that was up. That's up 17% this morning. I said everybody has an Aunt Ann, don't they? Well, I think we all have an Aunt Ann, don't we? I'm sure that we do. How about over Angela Merkel? Why don't we just make her our Aunt Ann? She was out there yesterday, you know, backing Draghi, saying, yep, we're going to do everything we can to protect that euro. Apparently, they are out for the afternoon. The euro moving back into the time frame where Aunt Angela Merkel came on and, you know, was spouting that they are going to go ahead and protect the euro. I think they need to get out there and buy some. Of course, if we take a look at it, what was the euro actually doing? Let's flip this over here to a daily chart. It's the reason why you want to go back and forth between intraday charts, daily charts, and so forth. What the euro was doing on the daily chart here, folks, is if we just simply take a look at from the swing point high, that was August the 7th, that swing point was out at 1.24407, down to the swing point low that came in August the 10th. What you will see is it was also coming, it was just simply making a retracement. Now, what it was really also doing, it was coming into this little shooting star candle here. So you've got some resistance area right at the top of that candle. August 14th, that high, 1.23845. What did the euro get to intraday? Got up to 1.23809. So running into some resistance up there. Now, you get a close above that, you move above that, get a close above that. What it will do is it'll start making a run for the high out here, that high of the doji day on August the 7th, out at 1.24407. So you're going to want to be watching that. Why? You know, so they're going to have an impact on that pattern that we're following here on King, on the King dollar. We're taking a look at that 3 drive to a bottom pattern. If we take a look at the U.S. dollar index, what it has done, what it was doing yesterday and overnight was testing the swing point that we're talking about is August the 7th. That swing point high, 82.43. Let's just draw our line across that swing point. And what you will see is that area here has held. It is rejecting price. That swing point out there had 15,000 contracts. You came into it yesterday with 12,000 contracts. Not enough to bust it down. And you take a look at so far today what it's done, only 6,400 contracts today. Let's go see what's going on inside our ETF indices out here. Let's start by taking a look at the SPYs here real quick. The SPY is probably the area where you're going to want to really be paying attention to. The SPY closing inside the April 2nd swing point. So it got up and over May 1st. That swing point high was 141.61. It now has its sight set at 142.21. You are at 142.12 right now. Did it get up over there? 142.25, and it needed to get to 142.21. Most certainly it did. So the SPYs have now tested the high of that April 2nd swing point. What does that mean if you're a bull? That means today you want to see it close above 142.21. You don't care how it does it. You'd prefer to see it do it with volume. That means more than 151 million shares. If you're a bull and it closes below that on less than 151 million shares, then you might want to consider tightening up your stops. Why? Because it is New Moon Friday, folks, coming in at 11:55 Eastern Standard Time today. Thanks for being here this morning, folks. Stay tuned. The Money Master Show will be up. Then we go to Basil Chapman from 11 to 12. And then it's all about health with Nico DeHaan, 12 to 1, 1 to 2, Daryl Martin, 2 to 3, David White, 3 to 4, Ken Shreve, and the Tom O'Brien Show from 4 to 6, folks. Have a great Friday. Look forward to seeing you in a few or Monday morning.